Thank you all for joining us, and I'll keep an eye on the participants. I know that we have lots and lots of people registered, but we know that this one is in the middle of the day. And we thought that this is the best time to take your mind off of what's going on in the clinic and talk about how we are preparing to wrap up a hopefully successful 2025 for all of you and jumping into what we know is going to be your best year yet in 2026. So, for those of you that do not know me, my name is Kara McClanahan, and I am the CEO of Aesthetic Practice Partners, as well as the VP of Operations for Genesis Lifestyle Medicine. And I've had the privilege of being in this amazing industry for nearly 30 years. And operational consulting is what I do and what I love and am passionate about. And I'm super excited today to be joined by one of my personal amazing friends and like financial guru, Christin Trujillo, who is a founding partner of Maven Financial Partners. Christin, I'm going to let you do a little intro of yourself as we get started as well.
Sure. If you don't know me and if you don't know Maven, we're a fractional CFO firm. And if you're like, what the heck is a fractional CFO firm? So we are a part-time CFO, chief financial officer for practices all across the country. We work with a lot of aesthetic practices just like yours. And we're really filling in the gaps with what is missing between your bookkeeper and your CPA. So a lot of these partners, they're not really advising you on what's going on in the practice and they're not forward looking. So whenever it comes to year-end planning, which is the topic today, we're going to talk about some best practices, some things that you can do today, right now, to really close out your year and then start off strong, some really strategic best practices again that you can take back and really apply so that you can kind of maximize your profitability and all of the things that you're working so hard to accomplish. So I'm really excited to be here.
Yeah. And I work with so many practices, Kristen, that like again, we were kind of talking earlier that it's the numbers that scare us, right? It becomes overwhelming. And so to have partners like Maven Financial, we share a lot of clients. And so where we're able under APP to come in and help strategize operationally and really take that financial information that Kristen and her team help translate into strategy on the operational side. So definitely, so important to really, really have support in understanding your numbers because I think that again, that's one of the most scariest things for practices. So, but we're here really to talk about what does this look like for us at the end of year. The end of year is truly our most powerful time to really set ourselves up for success. Now, usually in the practices that I work with, we're doing our end of year prep and review in like October, November. We're not usually having these conversations in December. But what I'm hearing a lot from right now is practices that are like, we've got all these things going on. Yes, it's the busy holiday season, but we haven't even started our end of year reviews. So we're going to talk both financial and operational today when it comes to year end review. And this is the opportune time to really, really understand those hidden opportunities, looking back and looking forward. So, Kristen, let's talk a little bit about like those hidden opportunities on the financial side. How are we identifying our underperforming services? How are we really recognizing untapped revenue opportunities and learning from this year so that we can really, really focus on setting ourselves up for success next year and not repeating the lack of knowledge that maybe we're finding at the end of the year?
So I think I would advise that we start with the basics. So I usually like to get crowd participation in this space. I can't see any of you, but I'll just kind of make a statement. If you are not looking at your financials and let's say you have your spouse's cousin's best friend doing your books and you look at them once every 6 months or maybe once a year whenever you give them to the CPA to file your taxes, there's a lot of missed opportunity. So I would say, just right off the bat, if you aren't getting your financial statements, I'm talking about your P&L and your balance sheet reconciled. So that's putting the revenue categories in the right places, the expense categories in the right places. In your balance sheet, this is kind of like the redheaded stepchild of all of the financial statements, and it looks like Greek. And so if your balance sheet is wrong, your P&L is also wrong. It can't possibly be right. So just basically, you need to have reconciled financial statements. So as you're reflecting on what happened in 2025 in terms of some things that you should be analyzing, spotting the hidden opportunities, I really like to put the P&L side by side. And then here is the biggest tip. So if you're looking at the P&L, I have no context unless I am seeing the P&L with percentages. So if you have QuickBooks Online, I would advise there's a little button that you can hit at the top under the filter section. So customize the dates, pull in last year, and add percentages. So did your revenue grow? What are your expenses as a percentage of your revenue? So that is going to be a really quick, high level way for you to understand, well, what happened? Did I grow? Are there any variances in my financials? And did these percentages change? Because if you had a lot of growth, if I'm looking at the dollars like, oh, well, revenue went up, but costs went up, of course. Now I really want to make sure that these percentages look right.
I love that because I'll tell you, we don't do financial consulting at APP. We send all of our financial consulting friends over to you all at Maven. But when I ask practice owners, like how often you're reviewing your P&L, and do you know what like your percentage of revenue, all of your costs are, and all of these things, 9 out of 10 times they do not, and don't really understand the importance of looking at things as a percentage of their overall revenue. And so I love that tip. And like looking back really helps us prevent those costly mistakes in the next year, right? So we do want this to be interactive. You guys are all muted, but please feel free to use your chat function to ask questions, to put information in there. We may ask a couple questions as we go throughout. We are monitoring that as well. But like, Kristen, when it comes to budgets and looking at the end of the year, how would you say the most important, what is the importance of creating a budget, an operating budget? Because I'll tell you, most of our clients don't have those. We are setting budgets for all of our clients and trying to help with that kind of the end of the year. It's been a big push for us this year because we found that 9 out of 10 of our consulting clients do not have an actual operating budget, so they don't even know where those budget overruns are or those type of things, because they're not comparing it like their budget to their actuals to their budgets. If someone one doesn't have a budget, what is the easiest way to start something if they don't have, again, that financial acumen, maybe they don't have a fractional CFO to help them. What is the easiest way to recognize like how to build your budget?
Sure. So this is something that it's really a pillar, it's a foundational tool that we use whenever we're working with practices. So you mentioned that you and we share a lot of clients, APP and Maven share a lot of clients, but whenever we are budgeting and whenever we're analyzing the numbers, we're finding all of these operational things. So there's a lot of these collaboration points in building these budgets. Oftentimes you'll bring us a client and we're making some really big decisions and some transitions in the practice. I would say for starters, if you go back to that first point that I made, pull in your P&L, pull in the percentages, look at what it looked like last year, and then you can also run for the whole entire year a P&L by month. What are some trends that you're noticing? So we kind of touched on, using the percentages of revenue, using the percentages of expenses versus your revenue. you can start to analyze. Maybe you bought a device, maybe you added a new service line. A lot of people are adding peptides and more wellness things, and they're integrating more devices. So if you have these percentages and your revenue broken out, well, what are your goals for 2026 and what happened in 25 and what happened in 24? So I would use those as reference points. And then what you can do, this is really exciting stuff. So nobody get too excited over there, but you can pull out a spreadsheet. You can download that P&L in QuickBooks or Xero, whatever software that you're using, and you can download that to Excel. Look at what the trends of revenue are. Did I increase revenue in injectables? I added wellness or I added a laser. Did I increase revenue there? Is that my goal for next year? And then start to look at some cyclicality or some seasonality. Was January a slower month, but March was a peak month for you? Were the other J months softer, like June and July, but September ended up being a peak month? You can start to look at some trends in the numbers, and then also, of course, leveraging and referencing those percentages, but what are your goals for revenue? Be very, very thoughtful. Am I adding anything? Do I want something to grow? What am I going to target that as? Taking into account the seasonality. And then look at your percentage of COGS. So I like to start with the supply cost. Whenever I say COGS, that's cost of goods sold. So your injectables, your laser consumables, your medical supplies, all of these things. If you were 30% in 2024 spend, and then you were 35% spend on COGS in 25, why was that? And then what can you anticipate it to be next year? Maybe just assume 35%. What about payroll? Did you hire someone? Will you hire someone? What was it last year? Did you give people raises? The amount of calls that we're fielding right now to do year-end bonuses, which I imagine we're going to talk about year-end reviews and year-end bonuses in just a second. But what are you going to be spending on payroll? So reference what you spent last year, and then what will you anticipate spending this year? Are you changing comps? Are we adding? And then the fixed expenses, the great thing about these typically shouldn't change. So if you're generally averaging 5,000 a month on marketing, budget 5,000 a month on marketing unless you're getting a new website and you're adding some paid ads and things like that. Your rent ideally shouldn't change unless you've got an increase in your lease. Just kind of reference that. So you can put this together, but I think it's really important that you just have these foundational things. Are you one looking at it? Is it reconciled? And then you can use that and build your own budget.
I love that. So on the like what is your best tip for like again, someone is really trying to get a hold of their finances and all of that. And let's say, again, we're clueless. We don't know where to start. What is like we're talking about the P&Ls and the COGS. What are some of the best key KPIs that you recommend someone looking into like at this point in time in the year?
Well, if you're wanting to get a revenue breakdown, you are gonna have to leverage your practice management software. So if I am breaking out my COGS, now I might be able to allocate and say, oh, this vendor is always injectables, but a lot of times it's kind of tricky to do it in that way. So you might be better off putting your inventory. This is not going to sound very exciting, but putting your inventory and tracking it through your practice management software so you can understand, well, this is the revenue coming in, and then this is what I'm spending per unit and kind of analyzing it that way. Did I answer your question, or was there,
Yeah.
I think I went off on a tangent there, but
Yeah. No,
that's
it's okay.
one
Just
place that I would
KPIs. I
start.
wanted to like, yeah, the KPIs. So I look at like operational KPIs. This time at the end of the year, we're looking at like both finances and operational KPIs. So some of the KPIs that we like to look at this time of year with all of our consulting clients are things like how we're tracking things like our weekly revenue. And again, pulling in information from your practice management software. These should be things that you're monitoring all of the time. Weekly revenue, monthly revenue. The reason why I like to track it weekly as well as monthly is because that gives us an opportunity to say, hey, we're halfway through the month, but we're only a third of the way through our goal. But what can we do differently now to help us achieve those goals? If you're not all putting in, like if you've not done some of this tracking throughout the year, now is the time in December to look forward to how do we improve these KPIs? How do we put in systems to make sure that we're tracking these things next year? Right? Because oftentimes we're trying to like look at the end of the year, but we miss what we should have been tracking throughout the year. And so that's something that I think is really, really helpful for practices is really understanding what they should truly, truly be tracking. And so I think some of the KPIs that would be great for people to understand is how the financial metrics drive operations. And we're going to talk about some of these operational checklist items here in a moment. So other KPIs I think of are like revenue per provider. If we're not tracking revenue per provider, not just revenue as a whole, what is the implication of that and why is that so important, Kristen, from a financial perspective?
Yes. So now in hindsight, hearing you elaborate on some of these things, I don't think I answered your question whatsoever. So in terms of the KPIs,
Okay.
you talked about the revenue per provider. That's a really great one. So whenever we're analyzing the financials, we do like to pull a host and a series of KPIs out of the practice management software. I want to see revenue for the practice. I want to see retail revenue. I want to see revenue by category. I want to see where the revenue is coming from and who is producing the revenue. So, very simply, we don't necessarily look at this on a weekly basis. We look at this on a monthly basis, but who is producing the revenue by provider? Then, if you're noticing some variances, it may be seasonality, it may be skill set, it may be a lot of things, but whenever we're analyzing the KPIs, this is where we bring in my friend Kara. I don't even have to walk into the practice to understand that there are opportunities in the revenue. I just need to look at the KPIs. So if there is variances, I've got three injectors, they're all three full time, and one is producing a lot, one is producing median, and then one is producing very low. I look at three KPIs and I have to sometimes do some math. I'm so sorry again, but I can pull all of this stuff right out of the practice management software. So if I want to know truly what's going on with my revenue, it's the revenue by categories. Is it injectables? Is it filler? Is it Sculptra? Are there variances there? And then by provider, I want to see the revenue, their production. So whenever I say sales, I want to see what they're producing, the retail revenue, their revenue per hour, and then I'll give an additional definition to this revenue per hour. I like to see revenue per hour worked. So, what are they producing when they're with patients? Revenue per appointment and utilization. And these all have correlations to the operations. So, if I see that revenue per hour is low, but utilization is high, that tells me there's some operational opportunities. And so, I don't even have to go any further. I know that, well, maybe the appointment times are too long without even looking at what the appointment times are. I can see that there's some operational inefficiencies, that maybe it's workflow, maybe there needs to be some additional support staff. It's taking too long with the patients. And then I will also reference that average revenue per appointment that I just mentioned. Generally, if revenue per hour is low and utilization is high, I'm also seeing some opportunities there, which means we're not doing a great consult. There's no treatment planning happening. So those are some of the KPIs by provider that if you're like, what happened with my revenue? I would really like to maximize my revenue. We have benchmarks for all of these depending on what type of provider, what type of services, and that tells me what is happening operationally through the numbers.
I love that. And so, one of the things, again, there is always a correlation to the numbers and what we do inside the practice. So I love that you brought up the appointment times because that's actually one of the things that when we go on site and do operational assessments, one of the first things I look at is schedule utilization. And we're looking at things like those appointment times. I often hear from owners that, appointment times are too long, or I hear from the front desk providers are running over on their time and they're not monitoring that utilization and what those appointment times are and how that impacts your schedule. So, for example, are we just spending too much time in the treatment room? Or if our appointment times are always running over, are we actually not giving them enough time to give a quality consultation? And when you really break down those numbers and you understand what's going on, you know how you can really build your schedule. Maybe there is opportunity in there if you were shaving off, 10 minutes off of a consultation or a treatment time at the end of the day on a full schedule, that could be a whole nother patient appointment. Or if you're just, slamming appointments in there and your treatment times aren't long enough because you just want to get more people on the books, you're not giving that quality consultation or that quality treatment time. So you're probably not doing comprehensive treatment planning. So again, the numbers really tie back to kind of all of the things. Operationally, this is your time to look at everything within the practice. So not just the finances, right? Like how are you actually operating? They all tie together. Now is the perfect time to really dive into your patient database, making sure that you have clients that you've had them flagged that haven't been in a while so that you can create a re-engagement campaign. There's a lot of different ways to run reports and identify how those patients sit in your system. So you should really be segmenting your patient lists and identifying those opportunities. Refresh your system. There are a lot of reports within the EMRs now where you can actually run reports based on, not they don't have an updated phone number or the email is not in there correct. You can run an email fail list from your targeting, your marketing campaigns, and really just make sure that your database is as up to date as possible. And you're segmenting the list. That's one of my number one marketing tips to practices is to make sure that they're segmenting their patient lists. So again, you can run reports by, patients that have had X treatment but haven't had X treatment. You can run reports by patients that have given us consent for marketing. And there's a lot of different tools within your EMR systems that a lot of practices just simply aren't using. You also mentioned now's the opportune time to do your staff reviews. And so I will tell you, it is my personal opinion and something we work on with all of our staff review processes within our practices is that we actually separate tenure and annual performance. So typically each staff member would have a tenure, like an anniversary review, but that's more of a celebration. We're rewarding them for their tenure. We're acknowledging their time with their practice and the investment, but we separate that entirely from annual performance reviews. And one of the reasons why we do that is because what's the number one thing that staff ask us at their annual review when they've spent another year with us? What is that, Kristen?
Can
What
I
if you
please have a raise?
Yes, can I please have a raise? I've now worked here another year, regardless of my performance, because I've been here for another year, I expect a compensation increase. And so I separate those. Tenure reviews are celebrations. We're recognizing their time with their practice, we're recognizing their commitment to their practice, but I do annual reviews on a calendar basis. When I ran a large practice, all of our reviews were done in January. So we can look at the entire calendar year, the year prior, and really, really, recognize each staff member's contribution to the entire performance of the practice on an annual review. So really setting clear goals too allows you to put that in play on a calendar, right? So we're looking back in January at the previous year and that employee's contribution, and then we're setting goals and milestones and objectives and our continuing education plan for the future. And this is an opportune time, again, like I said, to separate tenure with performance, or from performance, because it really just makes it easier for us to keep those things separate and really focus on celebrating and really honoring tenure but really basing performance on their contribution to the practice. And so right now, I'm also getting asked by a lot of practices now is the holidays. And how do we handle holiday bonuses versus staff performance bonuses? What would you say, Kristen, is the biggest tip you give practices, knowing that every practice is going to be different, but that every practice is going to be different. However, it's unique to like, what's your recommendation? What's your advice for just general review questions?
I I love that you come into practices and you start to define systems and processes and some standards, especially as it relates to workflows. And whenever we're saying operations, I just feel like there's so many things that get buried in that term. But what we're trying to do is work out the financial implications of the operational decisions. So, whenever we are assessing payroll and we're assessing compensation, well, one are these profitable compensation models. Generally, if you have a base and you have this performance bonus, or if you are paying commission, I know that's a taboo word out in the space, but a
Mhm.
lot of people are paying a percentage of production and things like that. And then we also want to do holiday bonuses and we want to do annual reviews and we want to do percentages. And people are asking us for raises to their base. So if you are paying a mix of this percentage and a base, people are still asking for raises with their base or raises with the percentage. And they want that holiday bonus. They want that end of year bonus because they've worked really hard and they've helped contribute to all of the different things. So I will say 9 times out of 10, whenever I look at a practice and we're looking at payroll and we're kind of assessing, well, how are you giving raises and what are the parameters for determining these things and how are you giving and awarding these year-end bonuses? What does that look like? There aren't any operational procedures, and we've kind of taken the advice of someone and we've just thrown something together and then we're constantly answering to those questions about what should my bonus be and how do I know whenever I should do a raise. So I love that you come in and we've kind of worked out the math, and this is why this marriage is so great because there's two sides of this always. There's the financial and the operational side. I will say in terms of if you are thinking about bonuses, maybe you've already thought about yours for this year, but put this maybe on the docket for next year. I like to do a percentage, like allocate a percentage of profitability. And the way that I like to do this is let's say your profit is $300,000 this year. You are basically saying going forward, I'm going to take 5% of my profit or 10% of my profit because I'm a finance nerd. Make sure you look at your cash flow. Do you actually have that money to spend? Because you are also paying all of these loans and taxes and all the things. But the reason why I love doing this bonus pool in this way is that it rewards people based on profitability of the company. So if you have a $1 million profit year, that 10% is a lot larger than if you have a $300,000 year. So it creates some consistency, also some accountability and some parameters. Hey, I'm going to do 10% of my profit every year, and I'm going to put that in a pool. And to Kara's point, I think that you can allocate it based on retention. Like if you've been here 10 years or longer, you're going to get a bigger percentage of this pool. If you've been here 2 to 5 years, you're going to get this percentage of this pool. I do like to make some eligibility requirements. So if you were a poor performer, and you've been here 10 years plus, does it make sense for you to get the same bonus as someone that was a rock star that's been here for 10 years? Maybe, maybe not. So I like to do percentages within the pools. But that might be an easy way for you to just have some parameters around that. And then the math is pretty easy. So wait till January when your books are done, because y'all are getting them reconciled now. And then what is 5 to 10% of my profit?
I love that. And again, that's the biggest challenge that I think practices have because we want to be kind and we want to reward and we want to celebrate the holidays. I also ask my practices to separate holiday bonus or holiday gifts from performance. Another reason why we do performance bonuses and reviews in January, because then they really truly become separate from the holiday and it doesn't become an expectation. So just kind of my 2 cents in there as well. Now,
Are you
kind of
allocating,
next,
whenever you're
yep,
doing these reviews, Kara, are you like setting up goals? Like, tell me how you would advise people to do this review process, allocate the bonuses. Like, what else are you seeing? Because that's my opinion. That's how I advise. What are you
yeah,
doing?
yeah. No, so you're 100%. I mean, I literally follow your guidance on how you break down the math or the numbers, the percentages, like how you designate the dollars. Now, the operational side of the bonus or the performance reviews is very, very different. So again, I'm very operationally minded as well as I'm huge about goals, metrics, and accountability. So when we do our staff performance reviews in January, we have a tendency, we'll always ask the team member to do a self review. We want to know how they feel about their performance, right? That's important because sometimes we see things differently and it allows you to have a conversation around where a gap is or know that you're on the same page and that team member is meeting your expectation and they know what is expected of them. So we always have team members do self reviews as well as it's mirrored with the manager's review as well. Depending on how large the practice is, I also love a good peer review. Just a couple quick questions. How are your colleagues feeling about your support and how things are working within the practice? So we have metrics, clearly defined metrics. And so when we have already decided what those dollar amounts are based on performance, if we're hitting very clearly defined goals, they obviously have an eligibility to win or get that performance bonus or a percentage of it. So it also depends on the position. So positions that are commissioned throughout the year are going to potentially have a very different bonus structure than someone who's non-commissioned. So again, very goal oriented and the reviews are always the exact same. I have a tendency to do an annual performance review that lets us again look back at next year and then set the goals for this year. And typically I do mid-year reviews as well. So we'll do a mini review midway through the year to determine where are they in hitting their goals. And again, just like I was talking about the weekly revenue versus the monthly revenue, if we're 6 months into the year and you're 70% to your
Oh,
annual
yeah.
goals,
Sorry, your
well,
patient
we
like came
know
in.
we're doing really, really well. If you are 50% of the way through the year and you're 30% to your goals, that's a totally different conversation. So again, just trying to be as strategic as possible, but we use the same kind of algorithm or math, kind of taking guidance from you guys and how you recommend it from the bonus pools. Um,
And I will
moving
say
on,
this
and
is
does it?
just
Mhm,
I I'll just leave one other additional comment. I will say this is just if you're not doing a bonus, this could be a good, easy way. I do love just having a system and having a process. It makes these
mhm,
conversations a lot easier to manage. So if you have this review and you allocate raises, increases, bonuses based on a process, it just fields some additional questions. And then, you all. I'm sure that you love to do what you do and you love to take care of the patients, but you didn't necessarily open a nonprofit. You have to have goals within your practice. So these could be some financial goals that you're allocating and giving to the providers and the staff, but it could be some competency goals. Like, are they taking responsibility? Are they how's their integrity? How's their collaboration? How's their patient centricity? So there's all types of
mhm.
things that are really going to differentiate your practice and create some growth. So I would just be really thoughtful, maybe take some time and think about what's going to move the needle in my practice and how can I formulate some process and some type of system so I'm not having to be like, oh, is this a and I'm gonna have to make a decision on the fly because I don't have anything that's set in stone. I don't have this standardized review process. because it impacts every single thing that's going on in the business.
Absolutely. And we do have a question. I'll read that in just a second. But I will also say we have multiple different guidelines or outlines of what review processes could look like based on small, medium, and large practices. So at the end of the presentation, you'll have our contact information. Feel free to send us a quick email. We're happy to share that because we have them in PDF form, and it's literally three different possible scenarios for annual and ongoing performance reviews. Question in the chat is I'm bonusing staff per month when team or personal goals are met. How are we taking this, or are we taking this into consideration when bonusing at the end of the year, or would we choose one or the other? Kristen, what is your recommendation?
It depends. So, in terms of just staff and payroll and compensation in general, there's some math that I like to adhere to. For providers, I want all of the providers to be producing 5 to 6x, if not more, what we are compensating them. And this includes
Mhm.
the base, this includes the monthly bonuses, this includes the year-end bonuses. And then for administrative staff, this is your front desk, these are your MAs, these are all non-provider staff, up to 10% of your total payroll number. So I want the payroll, going back to the percentages, to be 30% or less. Now, if you're less and you're doing this monthly bonus and you're also doing an annual bonus, I don't necessarily have a preference. I just need the math to make sense so that we're making profitable decisions for the practice. If you look at your P&L and your payroll is 40%, there's a money leak right there. And it's either you've got too much
Mhm.
staff for the amount of revenue that you have coming in, or you have inappropriate compensation structures. So it might be that whenever I'm analyzing how you're compensating, we're doing the base plus the monthly bonuses plus the year end, that doesn't make sense profitability wise. So, I've given some suggestions, but there's not a one size fits all here. And I think that what is really important is one, that it maths, because I profitability is really, really important. It's important for your patients and your team and your staff in order to have some ability to grow with them. Um, so you can do whatever variation, but does it make sense and is it profitable? That's what I would say for
Yeah,
that.
I love that. Yeah, and and that's kind of what I was talking about earlier when I was saying it really, how we figure out bonuses really depends on, again, what their current compensation structure is. And so that we have to remember at the end of the day, when you have a high compensation structure with a high commission or incentive structure, just throwing additional dollars on top of that at the end of the year, is that really driving performance? Or again, are we just rewarding for holiday bonuses and those type of things? So feel free to, again, to add any additional questions that you might have into the chat about bonuses. We're going to move on from there. Some other operational things that really do tie back to both how we run our practices, but even our finances, are simple things like our compliance. Beginning of the year is the perfect time to do your OSHA and your HIPAA training. Make sure all of your provider credentialing is up to date, and your licenses. Those should all be part of your budget as well, right? There's fees for, continuing education that's required for licensing. There's licensing fees. There is the cost of HIPAA and OSHA training, depending if you have to, buy a program or what have you do. So again, making sure that that's part of your annual plan and part of your annual compliance. And one of the things that we forget is to continuously look at our facility and our equipment. Usually we're paying attention to those things when we're being reactive and we need a repair, and then there's a costly repair needed. We're not as proactive in those type of things that we could be to avoid some of those last minute costs or surprise costs. So one of the things that I like all of my practices to do is to do your facility inspection, walking through your space, making sure that you're looking at your maintenance logs, looking at every single piece of equipment that you have. Is there a planned upgrade? Oftentimes, we're waiting until the reps walk in the door and give us this amazing deal, which sometimes happens at the end of the year, sometimes not. And again, that is a cost to the practice. But if you are putting your budget together, but you've already know that there's equipment that you need to upgrade next year, making sure that that's part of your plan and your 2026 planning. As well as, the new year is always an opportunity to update our SOPs, make sure that we use that as a training opportunity. SOP, a standard operating protocol or procedure, doesn't apply to just our clinical treatments. Remember, you should have an SOP for every aspect of the practice. Everything that you do, it's how we stay aligned, but we also use them for training. Again, as a consultant, when I walk into practices, one of the number one needs is SOPs. Maybe we created something or we just downloaded something that a manufacturer gave us, but it's really not a true SOP. And that's a compliance issue, as well as on the annual basis when you're updating your SOPs, it's time to sit down with your team. Make sure that we're all performing these tasks the same way. Using them as learning and training opportunities. And again, this becomes costly when we are having to go back and fix things that could have been handled with a training and a written SOP, making sure that we're getting rid of outdated workflows, that we have current workflows. Things are changing constantly in our practices with a new integration of technology, new team members, and those type of things. You have to be continuing to refine those. And again, if you're doing it on an annual basis and it just becomes part of your year-end wrap up or the beginning of the year planning, again, it's training opportunities and it really helps keep the team aligned. This is also another great opportunity to audit your own client experience. So a lot of practices don't do things like surveys. I send surveys out about twice a year, patient experience surveys for our clients. And it's just a simple, maybe 5 question, how was your experience? This also can create re-engagement. So it keeps you top of mind and allows you to really, really understand the experience that your patient is getting. We also audit our reviews annually. So oftentimes we're just looking at our reviews like when they come in. But sometimes they get missed, or we start seeing patterns when we actually really fully audit them that allow us to tweak our processes, enhance our patient experience. So, end of year, like full audit of your online reviews is a good way to implement what do we want to do to enhance our patient experience next year? Are there any patterns or trends that maybe we missed because we just saw the reviews coming in one by one? But when we audit them and look at them all together, we'll start recognizing trends. And again, how do we build improvement in the next year? All of this ties back to really understanding how the practice is running because we're in it all day long, all year long, and it's hard to see from the outside in on all these little things that really make big differences in both your patient experience, but they impact both your operations and your finances. From a client experience audit, everyone always asks me how I do that. So I'll tell you with the enhancement of AI, a lot of people are kind of afraid to use it, but I actually find that there are a lot of different ways that it can be used efficiently. And auditing your client experience is one of those ways. You quite honestly can copy and paste from your Google reviews, your Facebook reviews, all of your different review sites into whatever your preferred AI method is and ask it to analyze the reviews and give recommendations and identify trends. And just by copying those links in there and asking it to go out and look at review sites, you get a lot of really important information and you didn't have to spend a ton of hours looking at those sites yourselves. Somebody asked, what company do you recommend for sending out patient reviews or questionnaires? I mean, honestly, you could use a Survey Monkey, you can use a Constant Contact, a MailChimp. I don't necessarily find that it's productive to use an outside service. That's just another cost of something that you can do very easily within the practice. And I do recommend making them blind with the option of having an identifier if they want to speak to somebody in the practice. Things like this, and also looking at your like marketing performance year over year. How does this set people up from a financial perspective? All these different operational checkpoints, Kristen, how does it help them improve their finances in the practice?
We talk about marketing a lot. So, whether it's marketing dollars that we're spending for new patient generation, so this is maybe paid social, this is Google Ads, this is the SEO. These are all of the things. These are the Google reviews. So, the more Google reviews that you have, the better SEO, the more organic
Hmm.
traffic you're going to be getting to your website. We look at marketing a lot, not just because it's an expense item, because it influences revenue. So, what is generating a lot of revenue for the practice in terms of where I'm spending my marketing dollars? So, we look at client acquisition costs, we look at the volume of leads, we measure new patients, we look at retention aspects. So, there's also some, I say free, but it's going to require some payroll and some internal processes and systems that you set up. In terms of the company that you recommend for sending out patient reviews, you probably could do something like this through your practice management software. You could do a Google form. So there's lots of, things that you don't have to pay for in terms of like a Survey Monkey and things like that. But whenever it comes to marketing and the financials, like these are hand in hand. So, are we retaining the patients? Are we getting enough new patients? What's the conversion rate with these new patients whenever we get somebody? What's the conversion rate between I've got a lead and I've got all of these leads? Am I converting these to a consult? So we look at marketing a lot because there's tons of overlap. And then in terms of like retention and growth of the practice, it does me no good to do a consult and one treatment and that patient never come back. So also, thinking about retention, how am I retargeting? Looking at my list you mentioned.
Yeah, absolutely. So again, it really, what you're doing now is going to set you up for what happens next year. So planning for 2026, budgeting priorities obviously are a must. So what do you think, Kristen, when it comes to like key planning, which service lines, when we're looking at how do you determine what service lines deserve expanded investment based on profitability? If I'm looking at my numbers, how do I decide where I need to invest in growing something? Just simply based on the numbers.
This is probably controversial. And you absolutely should be evaluating the data. But if you just want to understand profitability by service, then what are you charging? And consider the times that you're doing these promos and your discounts. And do you have this membership that gives discounts and free things? So keep that into consideration. You can't always just look at, well, my toxin, I'm charging $15 a unit. But yeah, you've got 90% of your patients on a membership that get 15% discount. So you can't necessarily look at that, but look at what the average cost is that your patient is paying for each of these services and what are your consumable costs. Now, laser, it might be low consumable cost, but you've got a $250,000 loan on your balance sheet and you're having to make monthly loan payments. So think about all of these cash flow implications too. You can do some quick math with this. So is my pricing appropriate? Did my vendors increase my prices? So does that mean that I need to increase my prices? And then in terms of, just picking where do I emphasize a particular service line? Are you trying to integrate something? Like if you just bought a laser because all the laser reps, they're hitting your practices hard. I know it because I've got a lot of calls last month and this month. But if you bought something, then I would definitely put some marketing spend. I'd put some implementation strategy. I'd put some training energy behind how am I going to make this work while also not losing revenue in some of my other categories. It's good to focus on something, but I don't want to be losing revenue in some of the other categories. It could be based on profitability. Hey, my lasers, they're just more profitable. I want to really focus on that. But what does that look like? It's one thing to say it, and it's another thing to have an implementation strategy, goals, and budgets for the team.
Absolutely. And one of the things I like to look at when I'm looking at service lines at the end of the year is yes, our top revenue producing or profitable service lines, but also pay attention to the bottom ones, right? Now's the time to look at those low generating treatments. and identify, do we need to continue these? Before we decide if we're going to continue those, like, why are they not performing? Is it staff buy-in? I find that most of the time it's clinical training. Our providers are recommending the treatments they love to do and they're excited about all day long, not just what you market, but some of it is marketing. Our patients don't even know that we're offering these services. So sometimes you have the opportunity to go back and look at those low profitability or low profit generating treatments and say, hey, let's kickstart this back up. Let's dust it off. Do some great clinical training. Maybe we integrate it into our recurring revenue model. Maybe we bundle it with another service. Maybe it just takes a little bit of excitement and getting the staff energized about doing this treatment again. You don't know until you assess it. Or maybe it really is truly time to get rid of something that you're just simply not utilizing. So, making sure that you're paying attention to not just your top revenue generating procedures, but also those bottom ones, right? And then also, most of my clients, we did their 2026 marketing plans, at least Q1 and Q2 in October. So if you've gotten to this date in December and you don't have even your Q1 marketing plan in place, how are you going to live within a budget? How do you know how you're going to allocate your spend? If you're not looking at the numbers and looking back to see what worked this last year, what didn't work, really, really planning ahead, being very reactive, especially to our marketing, is, obviously a loss leader. And also, typically, we have a tendency to see that's when we overspend because we just start throwing dollars, or we pull back. And one of the areas that I don't always like practices to see declining their spend is marketing. And we do that, especially at the end of the year. We pull back. We want to save dollars. We get to the end of the year and we're looking at our revenue and our profitability, and marketing is one of the first places that most practices go to cut. That's one of the places that I don't want to see my clients cutting from their budget. I just want to see them allocating dollars in the right place, whether that's their ad spend. Or again, what does that campaign look like? So being strategic and allocating dollars appropriately versus pulling back is typically what I recommend, especially at the end of the year. And you want to make sure that your team is completely aligned. At this point in time, you need to be putting this 2026 plan in place. You need to be spending time with your staff, asking these questions and really discussing it to make sure everyone's on the same page. Everyone understands their role in the practice and accountability as we continue to grow into the new year. Kristen, anything you want to add to that before we talk about what is the like intentional growth map look like for us?
Well, we could probably have a whole nother webinar so I'll on just what you said because I'll try to keep this short, but whenever we're thinking about marketing, I loved how you said we need to not necessarily cut, but we need to identify what's working and where we need to allocate the spend. It is not going to do you any good to remove marketing because others are going to be doubling down. So if you want to level up, if you want to
Hmm.
maintain, if you want to grow, but also, whenever I'm thinking about marketing, marketing is happening with the training in your team. So it's one thing to market
Hmm.
and attract people, but there's also marketing aspects. This is in the terms of those soft skills, and I hate to call it sales, but how's the team trained to communicate and be in alignment with what we are focused on? So if you're looking at those bottom performers, well, one, do you need it? Because you're probably buying consumables that you're keeping on the shelf
Hmm.
and you're not using. So if that's something that you really want to implement, is your team trained on it? And is this something that we're going for? Do you need to remove it? And then if I'm marketing anything, is the team really aligned on that? Are we communicating with the patient? Are we talking about it? And how are we kind of bringing this full circle? Because it's not just a Google ad whenever we're talking about that. So love
Yeah,
all the things.
very,
Excellent.
yeah. Very, very important. So, when you're talking about an intentional growth, we need to make sure, again, we're looking back and really understanding, again, that what's working, what's not working, creating that operational checklist, and giving yourself a plan, like really create a strategic plan for going forward. Now, we do have a operational and financial checklist that all of the attendees will get when we send the recording back out to you guys. But it does kind of go over that year-end review and that checklist for setting yourselves up for success in January and through. But I definitely recommend quarterly check-ins. You really, really need to spend time planning in your business so that you're reviewing your progress against your goals and you have time to reassess and understand where you need to pivot and create a different plan for the back half of the year. And as Kristen just said, we need to make sure that our team is trained up, aligned with the goals, they've bought in, and that we have a system for holding them accountable. I think that's one of the biggest misses is we do all this great intentional planning, we create all this strategy, we have these big plans, but I think the drop off is the accountability. So as leaders, we have to hold ourselves accountable first and then have systems to hold our team accountable. I think that that's the biggest thing that I see when we're talking about what's not working, all these great plans that we put in place and all the things that we really, really want to have for our practice go by the wayside when we're not holding our teams accountable. So we've gotten to the end and we don't have a ton of time. I do want to make sure that you capture our contact information. But if anybody has any questions, I'd love for you to share your, biggest kind of year-end challenging or some area or pain point that you'd like to help tackle at the end of the year. And we will be sending out that checklist. But if anybody has anything that they want to ask or share, you can feel free to use the chat. I'm happy to have anyone unmute if they want to have a conversation at this point. I don't see much in the chat. So if you do have questions, again, I'm going to share our contact information. Just remember that, again, it's all about creating an action plan, holding yourselves accountable, scheduling time to really, really reinforce your goal planning, holding your team accountable, and also celebrating wins so that we can really, really focus on, again, as we said early on, making sure that 2026 is your best year yet. Maven Financial Partners has offered a complimentary practice assessment. All you have to do, a financial assessment, all you have to do is scan that QR code there. I'll leave this up for just a moment. Looks like we do have a quick question. Oh, no, just a comment. Thank you, Ashley. So glad you joined us. So go ahead and scan that QR code. And also you can contact both APP and Maven by any of these channels here. Thank you for spending a little bit of your day with us. Hopefully we gave you some good tips on how to close out your 2025 and jumpstart 2026 and hopefully make it your best year yet. Thank you so much for joining us.